my biggest purchase ever was Bitcoin in 2011. I've bought a bunch of these tokens that have massively depreciated in value. I think lots of investors have. I kind of fell into it as well. Like, I thought, wow, this is incredible. I get to buy these tokens. They do all of this cool stuff. They represent all this value. And my experience has been the opposite of that. I've lost a lot of money in these things.
Welcome to the Traders Show. This episode is brought to you by Paperstone.
Greetings traders and welcome back to the Traders Show. So for today, I'll only be with Caleb. Ken is a bit busy with other errands, but I hope we'll be able to deliver some interesting insights about markets. So for today, we're going to go back again into the markets. Interesting things have been happening across the different markets, from currencies to stocks and majorly cryptocurrencies again. So we want to digest a bit of what has been happening this week, especially on the crypto markets. So we've seen some turmoil in the crypto markets, some companies losing more than 95% of their value, companies like FTX, and that sent a red flag to the crypto markets. And we saw other crypto markets also collapsing. We saw, I think, Bitcoin moving to a low of 17,000, very, very quick drop. We've seen a couple of other cryptocurrencies dropping very, very fast. We've also had some interesting movements also in currencies. We've seen some strong dollar weakness after some fundamental aspects that happened last week and this week. So on Friday last week, we saw unemployment jump 3% by 0 from 3.5 to 3.7, I think, something like that. Unemployment.
Okay.
Yeah, and also we also saw inflation numbers going down, and that has really, really affected the market. So that is probably what we can talk about, the state of the market currently, majorly what has been happening to FTX and the guy Sam Bankman Fried. So it's very, very interesting. Fortunes have been lost in the markets. It's normal. It's the nature of the markets. Markets have made people super rich, but again, it has caused some of the biggest financial disasters in history. And we saw some, I think, you remember back in, was it July, when we saw Terra Luna also collapsing 100%. So Terra Luna also lost about $60 billion during that time. Again, just yesterday, or was it today, some bank has filed for bankruptcy for FTX, again losing fortunes for himself and for clients. So things have been interesting in the markets, and personally, for me, I didn't have trades this week. With the volatility coming, momentum coming to the markets, that is not really my way of trading. I don't thrive in momentum markets. I thrive in markets that have some retracements and basically a contrarian form of trading. And for this week, I think most markets were very, very directional against one side, and I didn't get to have any opportunity to trade. And I think also that was a good thing for me to be out of the madness in the markets, because I believe for this week, a lot of people, if you are trapped on the wrong side of the market, probably a lot of people lost money. But again, the opportunities to make money, probably if you are in the other side of the market again, probably in the momentum side of the market, probably also there was good opportunities to make money with the volatility on the dollar, drop on the dollar. I think if you had anticipated that drop, probably you would have made a lot of money. Stocks were up, some huge percentages. I think Nasdaq was up, 9% for this week. That was a very, very huge jump again. So I think I can say that for the introduction, Caleb.
Cool. As I start off, I'd like to paraphrase one of our people who watch our videos. So yesterday, Anthony Onyango said, I remember early in 2020, you guys said most millionaires are married in a crisis. Well, boys, have we not a crisis with us? So shout out to you, Anthony Onyango. Is it Onyango? For saying that, because it shows that you really follow our content. deeply and all that. But yeah, as Tara said, today we'll talk about cryptocurrencies, what's happening in the market, why markets fell, of course, other few factors that are affecting the market, interest rates, inflation, reducing interest rates, the Feds talking about slowing down on increasing the interest rates. And then the other case, one of the biggest cases that we're seeing, what Tarrus has said, Sam Bankman Fried, with his company FTX, how it all did things behind the waters. No one was new. There was no enough transparency. And as we know, the cryptocurrency market is not as much regulated around the world. So it's normal to see such things. And normally when you see a new industry coming up, it's very easy to see people rising up to stardom, becoming very rich in a very short amount of time, because some knew about trade. He knew about crypto in 2017. Yeah. And cryptocurrency started all the way back in 2009. That's when Bitcoin came. Then from there, now the rest of the other companies or the cryptocurrency started coming. And Sam Bankman Fried, if you go watch his documentaries or videos that people have done on him, he just knew about this. He stumbled upon it in 2017. He's a computer guy, saw an opportunity. They started by doing arbitrage. I remember that's how they started looking. And what is arbitrage? Basically looking at different markets. Let's say in Tokyo, you're looking at maybe Bitcoin is being sold at $10,000. And then in America, people are willing to buy it for $11,000. So you buy from different exchanges and sell it at other exchanges at the same time. So doing that using computers, you can do it very fast. So during that time, they made a lot of money. I think him with his other few partners, and they saw an opportunity where they can now start their own business, start their own cryptocurrency exchange. And that's when they came up with FTX, which was it grew really fast compared to the other exchanges, and that's how he became one of the richest people. He's actually the youngest billionaire with 20. I remember he reached as high as $21 billion. How old is he?
About 29.
29, 30. So below Forbes 30 under 30, Sam Bankman Fried was at the very helm, at the very top of the list. And all of that has been wiped out in just a single day, which was this week on Tuesday, okay, early on in the week. And it's because of those things. People not doing their due diligence, them getting too comfortable at the top, not doing what needs to be done. The other time, also looking at his track record, he was really taking a lot of money and giving political aspirants in the mid-elections in the US. So I saw actually he was the second highest donor for elections, which is high. He gave about $70 to $80 million in just these elections alone. That's a lot of money. So having someone at the very top using these funds to drive political ideas, what he believes in, at the expense of his clients, all this now just came crumbling down in one single day. So we're doing a bit of research and we saw such stuff. Another thing that also came up was liquidity crunch, and that's what we've been discussing with Tarrus, trying to understand what really did they mean by liquidity crunch. But we'll put a couple of videos, so you're going to see a few videos talking about that. But the liquidity crunch, just looking about it, basically when we're looking at different markets to invest in, for example, like us, when we're talking about the FOREX market is one of the most liquid markets in the world. If you look at something like real estate, you can't buy a shamba or a land today for 50 million and easily sell it tomorrow. But if you have $50 million and you want to exchange it into pounds, or you want to change it to convert it into another security or instrument, it's easy to do that. There's a lot of liquidity in that. But when it comes to even cryptocurrency, there's always someone willing to buy Bitcoin, someone willing to buy cryptocurrency with big amounts. Okay. But now what happened with FTX itself, they had what we call the liquidity crunch, which came from what we call a bank run. Bank run originally is stated in the banks. Okay, so if you watch your history, if you go watch 2008 crisis, watch what happened in Cyprus in 2013, and long time bank runs have always happened. So if I just explain a bit, because I was trying to teach my students in class, bank runs normally come when you put your money in a bank, there's what we call fractional reserve banking. So the bank is legally allowed in most cases. Let's use a scenario, America, for example. If you put your money in the bank is allowed to put 10% of that money in reserve. Okay. So if you put $1 million dollars with them, they put $100,000 on the side. That's your money. Then the rest of the 90%, they are legally allowed to loan it out. Yeah, and it's legal. They can loan it out. All the banks can do that. So if you thought that your money is in the bank, then at the moment, if you normally put your money in the banks could be having the biggest securities, what on a small map, or like there's a lot of security. But since your money is never in the bank, it's just digitally stored and it's loaned the rest of it. Now that's where the problem comes in. Now bank run comes when everyone together at the same time come and want to withdraw their money. Why do you think banks normally have a limit on how much you can remove each and every day? It's because they're controlling that so that a bank run doesn't occur. Yeah. If you could put 1 million today and easily remove it tomorrow, then there could be a problem. Yeah. Okay, just putting in today, removing tomorrow, and also there's a good side of it, security terms in terms of theft and all that, such that if someone is to steal from you and they're trying to rob you, they can't just withdraw your money at once. But at the same time, there's a problem when you really need the money. You have to go to the bank, talk to the people at the bank, sign documents before you remove your money. And it's your money, it's not their money, but it's a process to remove it. Now, a bank run occurs when everyone is coming for their money at the same time and there's no money in the bank. So there's only 10% in the bank and the rest there's no. So sort of the same thing was happening on FTX. Okay, the previous day before we started seeing the crash, Sunday, Monday, building up to Tuesday when the big crash came, people were withdrawing the money, and all of a sudden at the end of the day, people realized the money can't be accessed, or rather there's less money that they thought they have, because as we've been doing a bit of research, we're seeing that Sam Bankman Fried was heavily leveraged, and leverage is basically when you're borrowing money to do other stuff. Okay, so there's no money basically, and people wanted their coins, especially it was the FTT, the FTX, the FTX coin, which is the coin that is mostly used with the FTX company. Such is the same with BNB, which is the Binance coin, which is used by Binance, etc. Okay, so it's just the same way each economy has their own currency. The dollar, Kenya shilling, depending on which country. So also sort of the cryptocurrency exchange have their own. So all of that, we saw it now on Tuesday. It was at $22. Yeah. And immediately, or in a matter of hours, fell all the way to $4. Yeah. Even less. I remember the last I was looking with my students in class, it was at $2.3, which is about 90% of its value in just a few hours. Yeah. Okay, and that along that helped wipe out 94% of Sam's money. Yeah, okay. On Tuesday morning, he was worth 14 point something, or let's say $15 billion. At the end of the day, all of that was gone. So this is important stuff you should be looking at because it affects the market. And maybe Tarrus, you can touch a bit on the interest rates.
And even before I go to interest rates, probably I can touch on still on the FTX story. And you know how this thing I think happened was this is how I personally look at it. It's all trading because in the markets there always have to be buyers and sellers. So on Sunday, I remember I saw on Twitter there was this huge whale who said he's going to sell 4 billion worth of his FTX coins on Sunday now. Okay. Because now I think they had known that Binance was not going to get into that deal with FTX. The moment this guy Ali published your 4 billion.
So did he publish before he withdrew or he had already done it?
Alikuwa shatoka. Okay, so okay. I is the guy actually who probably sent panic to that market.
Who is this?
I can't remember very well, but okay. I think he's also affiliated with Binance, but I'm not so sure. Yeah. Then now on Tuesday now, you know, if you want to be selling your coins, there have to be someone else buying those coins. True. You see, so it has to be a transaction between two people. But now there are more sellers of FTX than people who are buying the FTX to balance the transactions. So I think that is really now what caused the liquidity crunch.
So it seems they had this solvency issue, and instead of just letting it blow up, Sam basically said, hey, we have a bunch of customer assets over here at FTX, or he somehow basically made a loan from FTX into Alameda to try to prop it up. I don't know why he did that. I mean, that's the moment in my mind where he crossed the line into probably committing fraud. And I think he probably lied to users, lied to investors. And he went around and tried to bail out these different companies like Voyager and BlockFi, and to sort of prop up this thing. And maybe he thought he could trade his way out of it or something. I'm not sure, but that seems to be where the mistake was made.
And again, the bank run. So the moment FTX now can't pay back some of their holders because there is no one buying on the other side, that is now when they surrendered and say that they can't. I think they started saying the FTX International is the one which has paused on withdrawals. So just say that they've paused on withdrawals, but the FTX US still has some liquidity. And that was the issue. And again, leverage. Leverage is also another thing that also probably led to this huge collapse. The fact that these guys were again heavily leveraged. I think 1.7 leverage. So yeah,
for every dollar they were accessing $7.
Yeah, exactly.
Borrowed.
Yeah. So that is what I think also caused the liquidity crunch for FTX. And of course, markets are markets when because these markets are correlated, like they are in an industry together. So it's a crypto industry. And the moment that panic came, I think that is what also caused the ripple effect also in the other crypto markets. We saw Ether dropping, I think, more than 7%. BTC dropped more than 10%. I think Solana also was down.
Yeah, Solana was one of the biggest losers because of FTX was heavily
invested in Solana. Yeah, also I think Solana is down. I think 16 or 18%. There whereabouts. So I think that is really what has caused that panic. And for me, my biggest issue, my biggest thoughts now is are these agencies to be trusted? Because we have assets in Binance. Can you just wake up one day again and you can't access your
coins?
Because Binance was the biggest exchange, followed by FTX, and number 2 is now down. So how much trust do you give to individual corporate companies to manage billions of dollars for people, billions of dollars for people? And I think that is the biggest question also for regulators. Like, how do we regulate an exchange that is not? Because I think also that is one thing that Sam has apologized for, like transparency. They were not transparent on their leverage. They were not transparent on their liquidity. Misinformation again, informing your clients the wrong things. So there's a lot of things that has caused the crash. But for me, my biggest concern now is who do you trust, and what is your trust pegged on? The same way people say there is no trust in the dollar because it's not pegged on nothing. Where is your trust on cryptos pegged on? Because I think the trust comes that the next person will find the price being attractive. What happens now when they don't find the price being attractive? And that is what causes now 95% a drop. Because I think it's difficult for you to find such drops in the dollar or the pound or even the Kenya shillings.
Yeah, true.
Very difficult for you for your assets to drop 98%. But you believe in something that is purely speculative, and that is also another thing that probably makes cryptos also a bit of a tricky asset to trade. Because also in terms of risk, that is why it's the riskiest asset. Of course, comes with potential for very, very huge returns when you capture the markets right.
Yeah, of course.
But again, you need to understand that in terms of risk, there's a lot of risk also in those assets, especially first of all if you don't understand things like leverage. You've not done your research well on the white papers on where is the value for these cryptos, because cryptos also have value, but most cryptos are just pegged on hype and just belief that the next person will find the price being more attractive and speculative. So it's very, very good to do your due diligence. Again, a lot of losses in the markets come from due diligence, us not doing our own due diligence. Because I think some people would have been saved from this. But again, you never know. There's some things also which are some black swans But again, it all depends now on how the company run itself, because these are companies basically, and you see there's a whole thing about management, because also again there's that issue about FTX and their management. I hear that the management was also not so on the lookout. So I hear they didn't also have a very, very good board to make some accountable.
Incompetent board.
Yeah. So again, it's all business again, especially in terms of cryptos, and I think so that is what also gives BTC some ground.
Yeah.
Because BTC is like it was sort of a one-time technology that was developed and just runs.
Yeah.
This other cryptos really come in terms of there's an active management for it, and the moment you get incompetent people again managing those
such as the case with things like FTX, Luna.
Yeah, again Luna, we've seen it, XRP. So there's a lot again that comes into the collapse of the crypto. And personally for me, I believe the bearish market will continue moving for a while. I believe BTC will also touch 10k. And
also I'm looking for 10-12k there.
Yeah. So because if we've now come to, I think BTC is down about what percent? About 75 right now. From the highs.
From 68 to go.
Exactly. I was saying with Ken, if you invested in cryptos in 2020 and probably if you didn't come out, you've lost again everything and probably even more.
It was a terrible investment, 100%, and I lost my money. I get it. I'm a diversified investor. I make mistakes. This is one of them. But I learn from my mistakes. This won't be happening again. If I'm going to put serious capital to work in a broker-dealer, in an exchange, it's going to be one that's regulated, that has transparency, and has the same rules of test that every other exchange that deals in stocks and bonds has.
So again, that is... markets are markets. Timing markets is very, very difficult.
How do you lose everything? And you've lost everything.
Well, like all your profits and more. Like, because let's say you bought at 20k. Yeah. Let's say you bought it at 20k and it went to 65k and it's now at 17.
Okay,
you lost
so
all your profits
plus now some of your capital.
Some of your capital, yeah. And I think that is again very, very risky in terms of markets, because I believe it's hard for you to, and I think we said this also in a previous podcast. Now, when the music stops, that's when the music inaanza kustop saizi. Guys are very confused about the markets. Fundamentals are sending mixed signals to the market. It's just an interesting time to be in the markets. Like for the last 2-3 years, we've seen a lot of mania and madness in the markets.
Because talking about what you're talking about. Okay, rather just adding a bit on it. I was talking to my mom the other day. When was it? On Friday morning. And, well, my mom has only heard about cryptocurrencies through me. She's not participated in it. She's not. But on Friday, she was asking me, hey, Caleb, I saw something on BBC about these cryptocurrencies. Were you affected? So I was like, yeah, the markets are down. Then she started talking her own opinion, which now I think most people could talk about this opinion, especially if you do not have a background in forex or financial markets. So she started saying things like the way Bitcoin was picking up nicely, it was a good industry. Now it's all gone. Because the news portrays stuff.
Yeah,
it portrays as if now cryptos, everything have crashed kabisa. Nothing is coming back up. So to her mind, she's like, hey, Kwanza, stop dealing with those things. Very, very bad. They don't know this is the time now that people start investing and making money. Because very soon, when we go back to 30,000, 40,000, what you think, the music beats will start coming now loud.
Yeah,
so
yeah, true.
Beats are not playing and people are not dancing to it. People are now out. Because at the same time, what you're saying when you started talking, we always sum out everything. When there's sell-off, there's someone who's buying. It's not like it's being sold into the air. Whenever the markets are falling, the fact that it's not falling straight to zero, it's because people, the buyers,
are stabilizing it. Yeah.
So for us, as traders and speculators and risk managers, you always have to ask yourself, why is someone buying at this price? What is the reason behind here? Who is willing to buy here? Okay. What Tarrus was saying, there are many coins which came up which were useless, but the other coins that have value and they have utility, they have use value. Okay. Now, if you do your due research on them, do your due diligence and understand those coins, understand those tokens, and you start buying them, you can get them at a very, very affordable prices. Okay. And that's what the Anthony was saying, what we're talking about in 2020. Because as we came into the space of cryptos in 2017, 18, I remember when we started knowing about crypto, Bitcoin had just fallen all the way from, it was actually rising. We were at $1,000. I remember we watched all the way from $1,000 straight to 20,000, crashed all the way to 3,000. Stayed below 10,000 for a very long time, and then started rallying. When was that? 2020.
2020.
When they lowered interest rates.
Yeah.
So such time. So people are borrowing money. It was easy to get access to money. It was easy to buy cryptocurrencies, and that's why you saw that price. So supply and demand, simple. Okay, we reached at the top. You see the opposite thing happening. When now we reached the top, now you started seeing those things we've been talking about, interest rates. I remember when we sold our cryptos, it was just when we had Fed Powell saying that they want to start
raising rates and QT.
Exactly, when they're starting, and that was last year November. I remember October, November. And ever since that time, markets have been in a downfall. We came all the way from 68,000 up there, all the way now, what we're saying, we're trading around 18, 17,000. We still expect it to fall a bit more, all the way to around 10,000. And don't be surprised if markets go lower, because that's the same thing. Solana has come all the way from $250.
It's currently at?
It hit $10.
10? I think it's at 13.
It hit 10. It's panded a bit. It's around 18, but it hit 10. And it can even go lower. Things like Filecoin. Filecoin was at 100 and something. That thing is at $4.
Oh. That's about 90%. 95.
95 around there about. So Ethereum, BTC, don't be surprised if you see even much sell-off coming, because like Warren Buffett saying, they start looking for opportunities when there's blood in the streets. And when it's blood, they mean blood, not just 50% discount. As in that time, no one is willing to buy. Is when now they step up and start buying. So that's what I was saying. I'd cut you off a bit. Just talking about the sentiment that people are talking around cryptocurrencies.
Okay, I think I also done about the crypto markets. But for me, I wanted to
before you finish the crypto, there's something I also wanted to ask, because you had asked a question concerning the coins. What we were researching on and looking at, the other question that begs is, do you think this is people controlling the markets such that it was an attack on FTX? Well, that's what Sam did in terms of what he did, that he wasn't doing his due diligence, a little bit of incompetence in the board, in the group, in the company. But behind the scene, do you think, because there are some people who went onto Twitter to really say that this was a plan by CZ, the head of Binance and other cryptocurrency exchange, to wipe out. Because with what he said, because what people are speculating is that when FTX approached Binance and CZ to buy them out, then this guy was very willing to do it. Then the next day is very willing never to do it.
Yeah, true.
So you see, it gave
it
hope.
Sabotage also.
Exactly.
Sabotage.
Now it crashed because now everyone is now taking their trust into this guy. So FTX had stabilized kidogo. Then all of a sudden he added fuel to the fire. And then now with this company, the numbers are bad, the books are bad. We don't want them anymore. So you see that going down, because at the same time, the time when they talked about not investing in that is the same time they came and released their reserves, saying that they have about $69 billion worth of cryptocurrency in their reserves. Okay. And that same immediate time, that same day when they're talking about that, you saw Binance moving up 150%. All the way from 200 to 670. I remember it spiked that point. So it could also be a game at the business is business.
Because I was saying, like, all these things is now depending on the price. Much of, if you're not trading things of value, then you're looking at the price. And the moment markets are sensitive to such data, boom and bust. We've seen people make money in boom and bust cycles. you hype a company. Let's say you're not very even interested maybe in that company. You hype it, it goes to social media. People get interested in it. People also are going to stop again. I did the same thing. I think it was a what % return from $4 to about 400.
That's crazy. Yeah.
Exactly. So we've also seen in the markets things like that, and that time it was now retailers sabotaging the institutional investor. Currently, again, as Caleb is saying, that also might be very, very true, because on that Tuesday is when FTX fell that 94%. On that news that Binance also is working out on
FTX.
On that deal, exactly. And that is probably now why when guys were selling, there was no one interested now in that price again. Everyone was now running away from that price, and that is now what caused that sell-off again. So it's a ripple effect of multiple things. From maybe inside, then the deal was supposed to work out, and then probably Binance waka notice the financials are not so good. Probably kuna some things hazikuwa zimeputiwa into light well, and that is why they walked out of the deal. That sent panic to the markets. There were no buyers, only sellers. And the market collapsed. That was in the crypto markets. Very, very interesting things happening, but I'm very, very happy. Good prices are coming back. This is now time to start looking at where to put your money at. As Caleb said, it's currently the time now to be the confident guy, not the guy in the panic mode. So currently, there are good prices. Even probably if you buy currently at 15K on BTC and such prices,
discounted,
and the market just moves to 30, you've doubled some of your holdings. So I think these are the times now to look for those 10x, 20x returns in the markets, and it has to have some boldness in you to commit into such trades again. So currently, if you're looking into cryptos, but you have to understand that you're taking very, very huge risks. This is not like CFDs whereby again, it's very, very good to trade cryptos not on leverage, but on cash. That also will really, really help you avoid wipeouts when the market moves some huge percentages. And that is also some critical things that probably you can learn from us, and how we do teach how to trade cryptos, because we trade in the crypto markets, but a bit differently from how we trade in the forex market. In the forex market, we are CFD traders. In the crypto markets, we are cash traders, and really, really makes sense for us, because if you're holding CFDs on cryptos, there's no way you'd have survived with these drops in the markets. Markets are
Even
down
just
75%. Yeah, markets are down 75%. If you're leveraged just 1:2, most likely you're out.
Before you'll be out when market was down 50%.
Exactly. So that is why we always say it's good to understand also what you're investing in, not just hype, or because just people are talking about it and you're just going to open accounts and getting into all these online businesses. There's an opportunity to make money, but you have to be very, very knowledgeable also about markets. I think we can summarize with what has been happening fundamentally now in the markets,
which is the biggest factor.
What the biggest factor now are shaping markets. So for a very long time, the Feds have been trying to fight inflation, and they've been going very, very aggressive on it until recently. Now, I think there's some signs now of inflation starting to come down. I think, was it on Wednesday or Thursday?
Thursday.
On Thursday, we saw inflation numbers come down from 8.2% to 7.7%. And that probably made traders and investors feel like the trajectory for inflation is starting to cool down. Also, the Feds had also highlighted on it also that they still have a long way to go to 2%, but probably the rate of the aggression is probably what can go down.
The target for inflation, they want it to go down to 2%.
Yeah, that is the target for inflation.
There's still a long way.
A very long way. That is why they say they will continue raising rates, but probably at a lower pace, less aggressively. And I think markets are very sensitive to such kinds of data. Recently, we were very, very. Markets were looking very, very bullish, strongly on the dollar on those news. But for this week, we've seen, I think dollar was down about 4%. DXY, that is DXY, was down about 4%. Stocks were up for
heavily.
I think stocks were up heavily for the last week. And so that also came the fact that also unemployment rate also jumped on Friday. NFP numbers were poorer than expected. Numbers were also not so good. And that shows probably that if you continue raising rates aggressively again, you can tamper with the job market. And that is probably what the Feds doesn't want. So for me personally, I'm at a very, very gray area in terms of fundamentals and technicals. I'm not so sure if it's the turning point still, if the markets will continue, if dollar will continue still raining. In the long term, dollar is still very, very strong. Looking at the big picture perspective, if you're watching the monthly, weekly charts, you can see that the trend is still very, very strong. And probably that is for the trend followers to know. How do you know if the trend is approaching an end or not? Or you just move with the technicals to also gauge the trend. But technicals markets are looking like they're turning a bit. So we have that turn in the markets. We've seen, I think stocks also broke the previous lower low. Technically, signifying probably that
low high.
Lower high. And signifying that probably markets can be breaking again another significant level of resistance. So it's very, very critical. I'm not so sure of what will happen. I'm still watching for interest rate numbers, which will be coming, I think, December 14th or something. There's interest numbers again coming.
One more
out
for the year.
Yeah, one more for the year. So I think let's look at how the Feds will move for the next time for us to confirm if dollar will be stronger still, or because for again this can be temporary pullbacks for the dollar to get longer term buys again. Because for me personally, I was targeting about 120 for the DXY. We're still some distance away from it. I think we are at 113 or something right now. So I'm still having some insights in terms of dollar strength, but what has happened the last week since unemployment numbers jumped and inflation numbers went down, I'm a bit skeptical again in that move now fundamentally. And you have to be aware that markets are always way ahead of the economy. Like markets can start turning way earlier even before inflation numbers comes down to 2%.
Yeah, that's true. It's just the same way we started rising. The dollar started rising.
Yeah, exactly.
Before they started changing.
Rates. So we are a very critical part fundamentally, and I think it's very, very critical also for one to understand the fundamentals currently. If you're not understanding the fundamentals currently, you might be betting against some strong momentums. I always say fundamentals are heavier than technicals. Like they can shape markets way faster or with more strength than what technicals can.
Oh, for sure.
Yeah, and it's very, very important to be in the fundamental trend. And I think that is what I can agree with in terms of trend following. For trend following, you can't be against the fundamental trend. And it's very, very critical to watch out for such things in the markets. We've seen also elections are there. So elections are going on also in the US. Midterm elections are happening for I think it's a senatorial and gubernatorial seats. Again, probably that is also affecting markets in a way. But I always say those are qualitative data points, not quantitative data points. Very, very difficult for you to know how such things can affect markets. So also just if you are not understanding the effect of that in the markets, again, don't be very, very inclined to that. Probably. I think that is what has happened majorly for this week. We've seen a very, very weak dollar, very strong pound, very strong euro. Very strong gold. Gold also has been coming up very, very strongly, trying to defy the odds in the by the bears. We've seen also stocks up. Stocks are up. Only cryptos, they always move in tandem, but cryptos this time is out of sync with the others. Because you always see if gold is rising, cryptos might be rising a bit. Stocks might be stocks rising. Cryptos also might also be rising. But we've seen cryptos, there's panic in that market, and probably that is what is making it not very, very attractive for people right now. I think that is what majorly I had for this week. As you always say, remember, this is not financial advice. We're not telling anyone to sell or buy cryptos or sell or buy any financial instrument. This is just what we think about markets, and we like sharing our ideas about markets.
You can easily change.
Yeah, that can easily change. It's not financial advice to anyone. It's just for educational purposes. So I hope you can learn from us always. And I think for me, I'll stop there.
Yeah. Also me, I think I'll end it there. Just one thing I can finish off what Tarrus is talking about fundamentals. And I normally tell students in my introduction class when I'm giving them the outline of what they're going to learn in the course, I tell them when you come to fundamentals, it's the backbone of everything. It's what you're going to learn. So also you, as you look at the markets, don't just look at the price. Understand what is affecting the markets. So for me, I normally tell them the fundamentals answers the why. The why in the market. Why is market going up in the long term? Why is market going down? Then we come down to technical to look for the when. Okay, we are going up. Why are we going up? Interest rates are low. When should I buy? Now, looking at technicals, technicals basically is trying to look for the turning points. You're basically using different patterns to look for turning points with respect to that direction of the trend you're looking for. For example, for me, I'm a trend follower. So if we're going up, I'm looking to go up. So for me, like this past month, I was down -5, and I said I'll give an analysis of how my trading was. I was really down that time because it's at a really crucial point where market is changing. You thought of market dollar hasn't gone to a new high. It reached a point we've been basically moving lower, and it was sideways, lower, sideways, lower. Yeah. So I was still looking for dollar longs, and market now is turning. So it's very easy for me now moving forward to start changing my sentiment and look for now dollars to the opposite side, because market is now, the impulsive moves are now moving to the downside. So that's all technical. So it's important to understand both. I remember when we started out, we were heavily focused on technical. Then we came and discovered, we need to understand fundamentals and interest rates and inflation. And Tarrus does a very good thing, a very good class of teaching that in his fundamental class. So that's pretty much it. That video will come soon, but like Tarrus said, this is not financial advice. We just talk our own understanding. Next week, Tuesday, Wednesday, interest rates, so there can be something new that comes in the market that changes our whole idea of the markets. Then you start changing. So that's why we normally say, do your own research and be adamant, do your own due diligence and prepare for the markets well. All of that topping it up with the cherry, which is risk management. Always use proper risk management, which also Tarrus teaches in our courses very well. So make sure to come for our classes soon. We're also looking to move to change our location. We'll update you guys very soon on how that is going to be. But we're having a bigger, better offices where all of you can come and meet us and trade with us and learn with us. So as I keep saying all the time when I end my videos, always remember to stay woke, stay financially literate, and may the peeps be with you. See you soon. Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.